Look, I'd say one of the things that's made our lives a little bit more challenging of late in terms of advising our clients is this factor whereby FX markets, and specifically the dollar and broader risk, have remained extremely correlated. So simply put, we've seen a weakening dollar has tended to be associated with rising equity markets and vice versa. Now, what I think might be interesting to share with your viewers is across our platform, which has traditionally been an extremely dollar-centric platform, we have begun to see a pickup in interest to explore this concept of gently diversifying away from very over-concentrated positions in the dollar. And we think it makes a lot of sense. A variety of factors that have fueled dollar strength, especially since early 2018, turning from tailwinds to headwinds, particularly the interest rate differential that the US has enjoyed relative to most of the other G10 currencies. That has become less relevant. We're seeing a material expansion as well in the size of the Fed balance sheet. So one other thing to bear in mind, I think, is that periods of dollar weakness do tend to coincide with improved global growth expectations. So to the extent that we think the worst of the growth shock is behind us, that would be a dollar negative. We're looking for around 5% dollar weakness in the next year on a DXY terms. The big question I think that we need to bear in mind is whether the dollar can continue to weaken in the event that risk wobbles. And we've seen some micro examples of this, but I think that's really the key to watch going forward.
We are also watching comments coming from the Bank of Korea, the governor, after their rate decision, which they've said was unanimous, but also just hitting at these uncertainties to the recovery going forward, talking about the uncertainties to the growth path are very high. And the BOK Governor Lee saying we can consider normalizing rates only when the economy heals from the virus outbreak. So it seems that they're hinting there's a big question mark over that one. We'll keep policy accommodative and the economy is still sluggish. So it seems that, yes, people are optimistic, but this is what we're hearing globally too. I mean, still uncertainties lingering. Do you have a call on the Korean won specifically?
So I'd say no change really and no surprise from the BOK this morning. As you allude to, I think the focus has been on the language of the governor at the press conference, and particularly I think people have been looking out for any mention of potential alternative measures going forward. Look, in terms of dollar Korea, I'd say in an environment where equities have been broadly well supported and the dollar has been trading on the soft side, naturally the path of least resistance for dollar Korea has been lower. From an investment bank research perspective, JPMorgan, we continue to be quite constructive on Korea, and this is predicated on an anticipated rebound in the global activity, and within that, the view that the won has a very strong exposure to the global cycle. And we think that recent economic data, by and large, has helped to underpin this view. I think we've also got to watch out for a potential return of foreign equity flows after what has been a large outflow year to date. But look, I think you hit on a very interesting point. I think something that we're continuing to grapple with is the continued way that risk is trading in a rather supported fashion, even though obviously there is a lot of uncertainty both on the macro side and in terms of the path of the virus. But I think for broader markets, clearly supported by the unprecedented action that we've seen from governments and central banks, and I think that continues to be the driver that's underpinning risk for the time being, at least.